So guys, the first Monday of 2026 is about to be the most volatile trading day in this year. Unless you're sleeping under a rock, you must already be knowing that the Operation Absolute Resolve saw the US aircraft striking Caracas, the capital of Venezuela, and capturing the president Maduro. This isn't just a news story. It's a $17 trillion asset seizure by the US. Trump has already signaled that the US will be running the Venezuelan oil sector. It promises that it will fix the broken infrastructure, provided that this secret military undertaking from the US has culminated at this point wherein the Venezuelan president is captured. Let's see how does this undertaking impact the global commodity market. Venezuela holds 303 billion barrels of proven crude. That's 18% of world supply. It's more than that of Saudi Arabia's and 6 times more than that of US. But here comes the investor's nightmare, the quality mismatch. Venezuela produces heavy sour crude. It's thick and sulfurous and hard to refine. But over 60% of the US Gulf Coast refineries were built specifically to eat this type of oil. Since the US naval blockage began in late 2025, Venezuela's production plummeted from around 1.14 million barrels per day to 963,000 barrels per day. But one point that we as investors should take a note of is that the US can't just swap this Venezuela oil to their light Texas oil. Provided that the US invasion of Venezuela is not a sudden thing that happened overnight, you would expect the crude oil prices to be on the moon right now. But then it closed at $60.85 on Friday. So why this gap? The IEA is still forecasting a massive surplus of crude oil. That's around 3.8 million barrels per day. Also, the OPEC claims a spare capacity of 4 million barrels per day. But then again, the industry insiders already know that this number is largely fictional. Most of the members are already at their physical limit right now. Also, the third factor, which otherwise can be called as the Trump factor, is the belief in the investor's mind that the oil giants of America like the Chevron will be able to easily revive this decayed well. But then again, it's easier said than done. These wells, which have undergone decades of decay, might take several years to be revived. So right now, with the investors betting big on the metals which have gone vertically up on 2026, what can we expect on Monday? Analysts right now are expecting a big gap up in the crude oil prices. It can test the ranges of $62 to $65, while precious metals like gold and silver might also see a spike in the price because the investors will be rushing towards a safer investment option. If countries like China and Russia are announcing any retaliatory sanctions, this could also drive the prices of precious metals up. While these massive geopolitical changes are happening, do make sure that you are keeping a look at your portfolio and keeping it protected. Also, investors in the Indian market should pay special attention to the companies which rely on crude if it is present in their portfolios. What is your opinion on the price movement of the commodity markets? Gold, silver, crude oil. What are you going to buy for 2026? Do let me know in the comment section.